Well, a blockbuster rally on Friday lifted the sentiment on Dalal Street, helping the Sensex and the Nifty end the week in the green. But despite that, 50% of the Nifty stocks are negative for this week as the tug of war between the bulls and the bears continue. Hello and welcome to Editors Roundtable. Today, I'm of course Sonia, and with me I have Prashant, Nimesh, Nigel, and we have a special guest with us today in the studio. Nilesh Shah of Kotak Mahindra AMC is here with us in the newsroom. Nilesh, thank you so much for being here. It's such a, it's such an interesting time, right? Interesting week for the market. With even the kitchen sink thrown at the market, this market is back, and how? I mean, that just speaks about the kind of support that we're getting from the domestic institutions.
I think Nilesh once told me at an event, he said, "Looks, it seems like God is an Indian, right?" Whatever you throw at this market,
it just bounces back.
Yeah. Something is there for Fridays. I don't know what's happening every Friday. The way markets come back and pull back is how, we probably just be in a sideways or a negative market for the entire week till Thursday, and all of a sudden Friday, it's just like, from nowhere today's rally came, right? I mean, 400 points on the Nifty, and we've just recovered all the losses what we saw throughout.
God is Indian. He doesn't want to spoil your weekend.
and he particularly likes Friday. So, I think, but let me just take two minutes to outline what has happened, because we've had a really, I think we will remember this sort of 2 weeks, the last 2 weeks, because they've been really, I don't use the word seminal lightly, but really something for global macro markets in that sense, right? We've had walls, for example, went to, they were crisis grade, back to 2000, 2020, 2008, 2020 level walls in many markets, and all of that has cooled off and come back to, it's almost as if nothing happened. If you went to sleep, on the 31st of July and sort of woke up now, you'd say, well, we're right there. Nice Goldilocks kind of situation, not too hot, not too cold, waiting for central banks to ease. But in between, you had a bit of a mini heart attack, which has happened. I'll not go through what happened back then. I'll just outline the bounce that we've had from the recent lows. The low which was made for global markets was the 5th of August. And just some numbers will give you the idea. First of all, Nasdaq's recovery over the last couple of days basically now means that it's actually flat on the month now. I mean, it's not down 4%, 5%. At one point, it was down 9%. It's not. It's flat on the month. So that's the kind of recovery we've seen. S&P 500 has added about $4 trillion in market capitalization from the low on the 5th of August. I mean, you're throwing around trillions of dollars. And there was an FT article which said, well, why is the Japanese market trading like a penny stock? But this is the S&P 500, and it's added $4 trillion from the lows. NVIDIA, one stock, added $700 billion in market cap from the lows on the 5th of August. I was looking at a particular the semiconductor space is the real leader in the US, and an ETF which tracks it closely, it's widely followed, is up 18% from that low on the 5th of August. The CBOE Wix, the wall, I mean, that's basically back to pre-jobs data, back to 15 levels. The high was 65. So, I mean, the question really is, do we go back to that same kind of looking up? Maybe the pace varies depending on who you ask, but the trajectory is up, and we've kind of put all this worry behind us. Also, Sonia, I was looking at the NSE 500 group of stocks from the 31st of July till now, because the high for that index was the 31st of July, and it's a broad-based index. I could only find 60 stocks out of 500 which are down more than 10%. Still, as of today's close.
So the big question is, why is the market sort of ignoring all the negative news flow, right? And just bouncing back. Nilesh, you want to comment on that? I mean, it's been a phenomenal market, so resilient, bouncing back in every bad news, and now where we're at, right? Once again above 24,000. But do you think that there is some sort of a time-wise correction coming, or not quite?
So answer is yes and no. Yes, because there is liquidity, very strong. And there is more money waiting to invest on correction. Market is never kind to such money. It goes up, sucks everything, and then only gives the correction. Two, this money is coming with confidence. There was a question asked in one of the meetings where someone said, why are you launching funds? Isn't this expensive market? And I said, do you want to short the market for next 5 years? If yes, then I will not launch the fund. That guy kept quiet. So money is coming with confidence. They are optimistic about future. And third, between this combination of fundamentals and liquidity, our competitors are scoring self-coal. You can't go to China because of Taiwan issue and real estate worries and slowdown. Russia is right off. Brazil with communist government is gone. So effectively, we are also getting, allocation because there's no other competitor. Now you put three things together, no doubt market is rising.
And the market is doing what it is doing without foreign inflows, right? I mean, so far at least.
Now imagine if they have to come and buy, what will happen?
I mean, it's just, but do you think the flows story will continue? 30, 40,000 crores now is coming into this market every month.
Prashant bhai, between FY21 to FY23, when markets delivered like 100% combined return, more money went into currency notes, double than what comes to mutual fund. So I have to just convince the person on the street कि भैया पैसा घर पे मत रखो, mutual fund में डालिए. That will ensure that my flows will double from what level I am getting. How difficult it will be for me to convince an average guy that घर में रह के currency note double नहीं होगी. It's very difficult, I believe, but I will keep trying.
I think people have understood, right? I mean, they look at the SIP data on a month-on-month, it's only going up. The domestic equity is so strong. Even X of SIP is a very strong equity cult now. Everybody, I mean, the remotes of areas is where, you're getting inflows into the equity market. So, but, the other point is so much of cash is sitting on the sidelines. Mutual funds are sitting on cash. The larger HNIs and, the family offices are sitting on cash as well. So point taken that, you can't say a very sharp correction, but from a valuation point of view, where do you stand right now? I mean, are you getting a comfort that you can deploy more money into, say, defense or those kind of sectors?
So we'll have to be very selective. In a lighter vein, this is Amar Akbar Anthony Market.
Yes.
I was waiting for that, Nilesh. God is an Indian, I loved it. But Amar Akbar Anthony on a Friday evening, go for it.
So, यहाँ पे अनहोनी दिख रही है with the kind of rally. And there are stocks like Amar Bhai, upright police officer, good fundamentals, good valuation. You stick to them, you will make money.
The naughty.
Of course, there are also stocks like Anthony Bhai where fundamentals are good, but valuations are too expensive. Now, Anthony Bhai has to become like Amar Bhai, which he happened in the film, and then you will make money on them.
So I have a question. Do you come up with these on your own, or do you have some research team to help you with these nuggets?
No, this is all on my own.
Nilesh Bhai is all in his own. He'll always give us some of the other headlines. So he's now got that punch of giving headlines to media. So we really like that.
Okay, but let's also focus on what happened this week, right? Mining stocks were in focus after the industry faced a major setback. The Supreme Court verdict allowing state governments to levy additional royalty retrospectively and prospectively is expected to impact many mining companies. Nigel, you've listed down the implications on various mining companies. Take it away.
Well, that's right. The Supreme Court verdict actually was a blow for the mining companies. And mining companies, yes, they were down, but they didn't get knocked out. And that was something that was encouraging, because what the Supreme Court said, that the state governments, via royalty, via taxes, they can go ahead and levy taxes both retrospectively as well as on a prospective basis. So initially, people were very, very nervous because of the retrospective part of it. And if it wasn't the retrospective part of it, and if it had to be paid immediately, it would be a large proportion. If you look at the contingent liability as a percentage of the EBITDA for FY24, well, it would be very, very large. But the Supreme Court's verdict gave some hope, because there were a couple of clauses that they put in. They said that the payments can be staggered over the next 12 years. They also said that the states will not impose penalties or tax for past demands, which was encouraging. So because of this 12-year clause, well, the impact didn't look that much. For Tata Steel, they already made a contingent liability of around 17,350 crores. Now they'll be paying that over the next 12 years or so. And we have Phillip Capital that's put in a number very, very marginal in comparison to what their target price was. Similar is the case with SAIL. They had marked a contingent liability of around 3,000 crores, but it has to be paid over a long time. So the impact is very, very limited on the target price. NMDC as well, they had put out a contingent liability of around 4,400 crores, but it could be passed through as well, and it will have to be paid over the next few years. So some part of that will be pushed through to its clients. In all, this number, though they were looking big initially, but in fact, if they're going to be given time, then it doesn't look very, very big. And similar is the case with regard to NALCO. So all these numbers that came out post it appeared big, but because that concession was given off around 12 years odd, the impact is not that much. On a prospective basis, what about it? Well, we already had Jharkhand post the Supreme Court verdict in July itself. They went ahead and they tinkered with the rates. They increased the rates on coal and iron ore, on bauxite as well as manganese ore. And now the street believes that the other states as well, Maharashtra and other states, they will follow the way of Jharkhand. That is, don't increase taxes by that much, because otherwise, it doesn't become very, very viable for those companies. So that's why Phillip Capital, they've quantified it. They say that at most, most of these companies will have to incur only 1 to around 3% of the total cost of production. For steel companies, it could be a little bit higher hit, 400 to around 500 rupees approximately. But for aluminum companies, it won't be that large. All in all, it appears that yes, this Supreme Court verdict that came in on the mining companies, it was a knock at them, but it wasn't a knockout. So that's why the street did buy into that news, in fact, in Friday's trading session. Nilesh, can we get your comment on this particular case? Everyone was dreading it, but it seems now that, in fact, the outcome isn't that bad, because these taxes will be levied retrospectively, but they've given them timing. And also, Jharkhand government, they have shown the way. They've increased it by marginally, 50 to around 100, 200 rupees, easily digestible. Your take?
So, Nigel, you have explained very well with numbers. But the fundamental question will be, when you go and change laws retrospectively and you expect corporate sector to pay for it, that doesn't reflect good on the governance side. We have seen when Vodafone's retrospective tax amendment came, it did impact our valuation, our reputation in the market.
Indeed.
We are now 5th largest economy. We should be behaving like a 5th largest economy. This kind of retrospective changes are more meant for, let's say, emerging markets. We are still emerging market, but 5th largest economy, this doesn't look good.
Nilesh, actually, I was going to ask you that as a second question. First, I wanted to ask you what do you think about the impact, but you've answered it, because I was thinking it reminded you of the 2011, 2012 days, when we had these retrospective taxes, put the industry into a bit of a tizzy, a couple of sectors get hit. So let's hope that, better sense prevails. And as of now, most of these states at the center as well as the state, you have the similar government. So hopefully there is, nothing on a prospective basis that will hurt the industry as well.
The only good thing, Orissa is the only state in India which has revenue surplus. With this mineral royalties, I just hope and pray that states uses them sensibly, like Orissa has been using it.
Correct. So, that is, of course, the one big headline of the week. The other big headline was the new listing, right, Ola. And it's been perplexing for everyone, the way Ola has rallied. But I just wanted your thoughts on that. How does one approach it? Because the company is still loss-making. Yes, there is EV adoption happening. Yes, it's kind of a hope that things will grow. But what do you do from here?
So essentially, Ola is a leap of faith. You are taking a call on entrepreneur. Will he be able to deliver a product with supply chain management, which will eventually make money for you? There are a couple of leap of faith required. One, is EV the future? Today there are question marks on that. There is CNG motorbike, fossil fuel can continue to work for a while. The second is if not technology, the supply chain management. Will we have enough material? Will we depend upon China? Will there be consequences for the same? So when you're investing in this kind of a sector or a company, you are essentially taking a bet on the promoter that yes, he'll be able to surmount all the challenges.
Okay, well, you never know. I mean, it has come as a surprise to everyone the way the stock has moved. So now let's see from here on. But yes, all eyes will be on the new motorbike that Ola has announced. But with that, it's time for a short break on Editors Roundtable. We continue the discussion on the other side, so stay with us.